Rolling. So I want to welcome everyone to the Realty with Royce Summer Homeownership Educational Series. My name is Royce. I am the creator, host, and real estate expert. I'm excited everyone took time out today to join us and learn about title services and the vital role they play in the real estate transaction process. For those of you who do not know me, I am a real estate agent here in the Tampa Bay area and have been for the past 13 years. I specialize in working with first-time home buyers. That's why you have a lot of these types of educational classes that I'm offering. But I am experienced in working with all levels of buyers, sellers, and investors. And so before I introduce our special guest today, I just want to kind of give some ground rules. As I mentioned earlier, feel free to jump in if you have questions. Our guest expert will be delivering an abundance of information today. So feel free to ask questions. If you don't want to unmute yourselves, you can put the questions in the chat either on the Zoom or on live here on Instagram. We will talk a lot about a lot of different things, so feel free to ask your questions. I will go ahead and introduce our special guest today. His name is Tim Ryan. He is a dedicated licensed title agent with nearly 3 decades of experience at Fidelity National Title. He has over 29 years, he's worn many hats, excelling in sales and beyond. Tim's passion for real estate led him to start pitch groups in Brandon over 11 years ago, fostering connections and growth in the community. He's an active member of the Rotary and the Brandon Chamber of Commerce, always looking to give back. Tim's hard work has earned him a spot in Fidelity's President's Club for the past 8 years, and he continues to hone his skills through the Darrell Turnell Title Coaching Program. And then outside of work, Tim has been happily married to his wife, Diane, for over 29 years. And then he's been sharing a life filled with love and commitment. Today, Tim will be sharing his expertise by covering this important role of title services and what they play, the role they play in the real estate transactions. And so you're all in for some really good information. So Tim, I'll turn it over to you.
Thanks, Royce. That was a great introduction. Okay.
All right, we're back, and Tim will go ahead and continue with his wonderful presentation.
Thank you, Royce. Sorry about the technical difficulties. So like I was telling you guys, when you find that house and you finally get that sales contract and your agent is all happy, that's when the title company comes into play. The first things first is you're going to be told to make an earnest money deposit. Now, with the earnest money deposit, how we handle it at Fidelity here, Fidelity, we do an opening portal that gets sent to you, and you'll fill out some information, pertinent information. In that portal, on about the third page in, excuse me, is your wire instructions. Probably the easiest way to make your earnest money deposit is by the wire instructions. It's safe, it's secure, and it takes the agent and anybody, because you don't want to be sharing any of your personal information with anybody but us. So that's why my processor, Chrissy, and Nisha, the escrow officer, will be calling and contacting you. So once that earnest money is deposited in, we get started. We order the title search on the property, which we do a 30-year title search, which provides us with a title commitment. Now, the title commitment will tell us anything that's against that property. So let's say there's a mortgage, there could be a lien on it, and we have to clear that title up before we can do closing on that. Now, as a buyer, we're going to be dealing with your financial institution. So whatever bank or lender you're using, you're going to provide that information. So we'll be dealing with them, giving them updates on what's going on. We'll wait for their mortgage commitment. And in the very beginning, you'll be getting from them what they call a preliminary closing disclosure. So in that preliminary CD, it's going to tell you a lot of your fees. Our fees will be on there because we have to supply your lender with our fees. So if you had any questions, that's the time to ask them about those fees. So in the middle of the process, we'll keep you updated. But really the buyer side, you're kind of on the, I want to say on the sidelines for a little bit, because we're really dealing with your lender. And we'll keep you updated unless there's any type of change. So once the closing day approaches, we'll be asking you some questions. You'll be asked to bring 2 forms of ID to the closing. You'll be getting how much you have to bring to closing, what you're going to have to wire. You go back into those wire instructions back in. So on the day of the closing, you'll come in prepared to sign, depending on what type of financing deal you made, whether it's conventional, VA, or FHA. Could be an hour. We always allot about an hour, maybe a little bit more. And our closer, either Nisha or Amber, will go over all the documents with you, and you get a clear-cut copy of everything you're signing. And once we know that everything's clear and we got the money from your lender and your money, is when we disperse, and we call closing of escrow. So it's a pretty easy process into that point. It gets integral is when there's a problem with maybe the seller had a lien we're trying to get a payoff, maybe an HOA. There's a lot of different things that come into the closing, and you'll hear those terms in there. And like I said, we do a 30-year search to clear the title up. And there's two different types of title insurance policies. So let me talk about them for briefly. There's an owner's title policy, which the seller will be providing, because here in Hillsborough County and a lot of counties in the state of Florida, the seller provides you with the owner's title policy. So the owner's title policy is a big part of the puzzle. So that gives you the clear title. Then we're going to go ahead and record everything, record the deed and everything, but that gives you that clear title. And we always tell you to keep a hold of that owner's title policy and your survey, because if you refinance down the road, you'll need that. Okay, am I here, Royce? Yeah, okay. And there's another policy you should be getting, but it doesn't insure you. It's called the lender's title insurance policy. The lender's title policy insures the lender, because the lender has to know that there's nothing and no defects. So you can't say, oh, wow, I can't afford this anymore. I can't, because that would be an out on you. So it'll be two different policies, the lender policy and the owner's title policy, which the seller will provide to you. Now, in that process, you'll be getting all your copies, and in about 45 days after the closing, you're going to get your recorded deed, and you're going to get your survey. Well, you already have your survey, your recorded deed, and your owner's title policy. This is very imperative. Put that in a very safe location, because down the road, you're going to need that again. I tell people, I see Royce shaking her head. It's very important to keep a hold of that, because you don't want to call Royce and say, Royce, what do I do if you're looking for it? Because then down the road, you're going to have to file a homestead. So let's talk about homestead tax exemption for a second. So your homestead exemption, you're most likely going to be on for the first year, the sellers, unless they didn't homestead that property. So by March 1st of the following year, you'll have to file your homestead exemption. It can be done online with the property appraiser's office, or you can go in person to a local office and file that. Usually an agent like Royce, you'll be sending out your reminders, and you'll get reminders all the time. So make sure you file that homestead, because that's going to get your reduction in your property taxes. So it's something the Hillsborough County, a lot of counties offer, is the Hillsborough County tax exemption. So you want to definitely file that and get that done. But during the process, it usually goes very smooth. I know it's a nervous time. You're going to be hearing a lot of things like your home inspection, be busy doing your home inspection. You'll be doing a final walkthrough. So it comes a very busy time when you're working at. But the title piece usually works out pretty good, because we will be in touch with you the whole time. We'll be in touch with your agent. We'll be in touch with the seller and the seller's agent, as well as your lender, who's a big part of the piece. And we'll let you know if the seller's not ready yet, or they're still waiting on, you'll hear the term, my loan is in underwriting, or they're still trying to work out some kinks. So you'll be hearing that during the process. So, but why you need title insurance is something that I call it a peace of mind of insurance, because you're only going to pay it once, but it's going to give you that peace of mind, and nobody's going to knock on your door and say that I own part of that property, because now you have a title and you have a title insurance to back you up. Then no one can say that. And I always say to people, title insurance is the peace of mind insurance that you really need. I tell people, even on a cash transaction, to get title insurance, because it binds you. Because then we go ahead and insure your survey, and we have your endorsements on there. So it covers a lot of ranging things. And I used to work in our claims department, and believe me, we have claims, whether they're taxes, a missed mortgage, a missing heir at law. There's a lot of factors that happen, because when you buy a house, you don't know that other side of the transaction. So you don't know if you're buying it out of an estate. You don't know if you're buying it out of an LLC, or if you're buying it out of any type of different entity that you don't know. That's our job. That's our job, to fill in the blanks there and get that to you. Our job is to clear the clouds of title and anything in between to get you to the closing table. So I gave a couple of handouts to Royce, and it talks about title insurance, 21 reasons why you need title insurance, and what it really is, and what it binds. The best thing to do is to ask a lot of questions. Don't be afraid to call the office. Ask your agent, ask Royce, what's going on? Why is this title company calling me and bothering me? Who are they? Where are they located? And we also have another part of it. So you can't make the closing. We have a lot of these in this area because of MacDill Air Force Base. We do mail away closings. So not always do you have to be present for the closing. We can do a mail away. We set up a mobile notary for you to go to the house. We'd rather see your smiling face, but we understand things happen in closings. So we do mobile notary closings. We do overseas closings. We do sight unseen closings. And we set that up in the meantime once we get the appropriate addresses and notifications. So let's talk about another thing. Who's signing? Okay. So you've signed your contract and you're just buying it yourself. And that's all we need is you in a closing. We don't need anybody else unless you're bringing somebody in to help you out, but we just need you. And if it's you and your soon-to-be husband, they really should be on the contract as well if they're signing it. And your mortgage company will have that, and they will tell you that. So whoever's signing on the contract needs to be there to sign the contract. So with that, Royce, do you have any questions you can ask me or anything?
I have tons of questions, but I would like to see if anyone else has questions before I go in, because
Okay.
these are questions that I've gotten over the years, questions that I have gotten from people currently. And
Okay.
so anyone that wants to ask questions first?
Yeah.
Nope. Going once, going twice. Okay, so I'll go ahead and get started. So
Okay.
the first question I have is there a time limit on the coverage of title insurance?
Unless you make some type of change, there is no time limit. That policy stays into effect to the time you own that house.
Okay.
We'll issue a different policy if you refinance on that, but as long as you own that property and don't feed it to anybody else, that policy stays in effect till the time you sell that property. It's a good question. Good question.
And then, so I have this currently happening with the client. He's looking to purchase a home. He is married, but he's separated, and he has been for like 11 years. They just never got divorced. He wants to buy a house, but because he's married, they need a signature from his ex-wife. He can't find her. What would he do in that scenario?
We would have to really find the wife. We'd have to find her to continue on the transaction, because since we're a state that recognizes either you're married or you're divorced, we don't recognize legal separations in the state of Florida. So we'd have to find and do our best job to find her. And if she's out of state, we can send her the appropriate paperwork. She'd have to see a notary to sign, but we'd have to find we'd have to find the wife. So we have to find her. And the lender would not move on it unless we had the wife in place. They would hold up the package until we found the wife to sign.
Gotcha. Now, if you find a lien on a home, what happens? And then can you close a home with a lien on it?
It's another good question. Technically, if we find a lien on it, Royce, we try to get it remedied before the closing happens. So if it's a federal lien or if it's a judgment and it's nothing on the buyer, it's our end on the seller. No, we really can't close on the cloud because that lien would follow the buyer. So we could, if it's something that a repair, we could hold some money in escrow, we can do that. But if it's a cloud on title, I can't pass a clear title if I have a lien on title, whether it's a PACE lien that you hear about these days, or whether it's a home equity, or whether it's a federal tax lien or a judgment. I have to clear the title and I have to work with the seller to clear it. Technically, we're working on some that have some right now. What we usually do is the seller usually takes it out of their proceeds to clear up that lien to get it done.
Gotcha. So now, if let's say it's an investor that's purchasing a home and they're okay, maybe like it's an HOA lien, I guess would they be able to sign some type of waiver, saying that they will take over the lien and clear that?
If they sign some type of hold harmless and some type of waiver, I imagine we would have to have our underwriters take a look at that, Royce, to see if we're whether to accept that. And we'd have to work out something that they had it done before the closing took place.
Gotcha. Okay.
Yes.
Now, this is more of like a statement, but
Yeah.
you mentioned that the deed will come. You guys send the deed within 45 days. I know a lot of times you always are, well, buyers after they purchase the home, they're always getting like junk mail. and people are asking them to pay for their deed. So it's important that they
No,
know that they don't have to, because the title
no,
company is going to send it, right?
correct. Good question, Royce. If you get anything in the mail after the closing that says you have to pay for this, and I'm going to say, and I'm not going to 100% of the time, but I'm going to say more than 75, 80%, it's a scam. Wait
Mm-hmm.
for you'll get a big envelope, a white official envelope with your name on the front of it from, it'll say Fidelity National Title. In that will be your owner's title insurance policy and your recorded deed. That's the only thing you're going to get from us at the end of the transaction. You will be getting some stuff from some companies saying, insure your deed, we'll record it for you. And you can run it by, you can call us or you can call Royce, and we'll let you know that it's 99% of the time is some type of scam they're trying to work.
Yeah,
Good
they're just
question.
trying to get your
Really good.
money. You don't need to do it. They give it to you for free.
Yeah.
And
Yes.
so it's good. So when you do the fees with the mortgage company, at what point are the fees finalized? Because I know you get a quote in the beginning when you go into contract. Does that
Mm-hmm.
initial quote include the title company's fees, or does their estimate of what it will be and then the
It's an
final?
estimate, Royce. We give them our fees. On the buyer side, you're going to pay a closing fee. So we'll have a closing fee, and we're usually at around 425. You'll have a search fee, and you'll also have a owner's policy, a lender's policy, and that's
Mhm.
usually around like 550. I think we charge it, and then you'll have endorsements. So endorsements are, and that's why we don't finalize it. We wait till the lender to tell us what type of endorsements. If it's a Form 9 or an 8.1, which endorses the survey, the environmental protection lien, whether it's in a condo, could be a condo endorsement lien. So we wait till the lender to tell us what endorsements we're going to add to the policy. So,
Yeah.
so at very end, at the final, they'll get a final CD towards the very end from their lender telling them what those fees are, because they can't generate a mortgage package until we have those fees and everything's handled. They can't go in underwriting and get that package printed until all the fees are on the CD. And the CD, just to let you know, is called a closing disclosure. You'll hear that a lot of times. Closing disclosure.
Gotcha. And I have one more question. This is a little bit out of the scope of what we were talking about
That's
today, but
okay.
it's good for us to kind of get thinking about it, because if you purchase a home, definitely if it's not your forever home, eventually you would sell it. And so when you're
Correct.
on the seller side, you're more of the person picking the title company to use
Correct.
to process the sale. And so can you tell us what's important, I guess, what features are important to look out for when choosing a title company?
Great question, Royce. That's right in my wheelhouse. um, you want to make sure the title company is still going to be there. Choosing a national company, because you'll see, could be CE, ABC title down the street. Well, you want to know the strength of their underwriter. So since Fidelity is a direct operation underwriter through Fidelity, we're not going anywhere. There's some of my competition. There's a couple other underwriters that are very, very strong as well. But you want to make sure that they're strong. You want to do a review on them. You want to make sure that people have a lot of experience. I look to my own office right here. Myself and Nisha Perry, our escrow officer and branch manager, have over 40 to 50 years of experience in this business. Amber DeFeo, my other closer, and Chrissy Sutz, my processor, they're in about 17 to 20 years with experience. So you want to look for experience. You want to look who's going to be there at the end. Too many title companies go out of business. And if you have a claim, you're chasing who their underwriter is. And then you got to file it, because we'll have your file. We will have the file of your file. Some of those other agencies, they might have sent it to Okie Dokie underwriter, and then you have to track them down. So I
Yeah.
always look to the strength of the company, who you feel comfortable with, who you can call. I mean, if one of your potential buyers called right now, I'd be able to answer a question for them, or a seller. So you want to be really careful when you're picking your title agency.
Yeah.
Insure.
And it's all about communication too, because
And
like he
it
said,
is.
you want to be able to call them and get your questions answered, because they're the intermediary when it comes to getting to the final, place of getting your check. And
And
so
Royce
another
and I just
good
had
plus.
and a quick story to give a Royce and I just had an episode about 2 to 3 weeks ago. Royce, hey Tim, can you check this? I'm going on a listing appointment. Get ready, and I can't find something. I looked something up. I went to 3 different avenues to find something for Royce,
Yeah.
and we couldn't find anything. But Another time, Royce was going on a one, and she said, "Tim, can you look something up for me?" I got her that information within an hour to have, because
Yeah.
I know how important it is to go
Yeah.
on that listing appointment or go work with a buyer when you have some information. So I'm able to find out what's against that property, whether there
Yeah.
is, if Royce is going to see Mary and John Smith, that it is Mary and John Smith. Because if Royce gets to a listing appointment and only Mary's there and there's no John, then Royce has to be a detective hat and ask, well,
Mm-hmm.
what happened to John? And that leads to
Yep.
another issue. It could be a probate. So then that's going to lead to another big thing, because probate can be a while. So if you're
Mm-hmm.
buying a property that hasn't been probated, you could be in a 6 month delay of buying that property
Yeah.
because it hasn't been probated. And that's a big thing that happens sometimes, that an agent, didn't know, or they didn't know they have to have it probated. So if it's not probated, it could delay the sale of the closing.
Yeah. No, I definitely, he brought up a good thing. Before I take any listing, I'm reaching out to Tim or Anisha to get the title search done, because I want to know upfront if there's any issues with the lien that will prevent us from selling it. And so definitely it's very, very important to make sure that you select the proper title company, one that is experienced, one that will communicate, one that will do, all the research that's necessary to get all of the answers we need to make sure that once you go and you sell a house or you purchase a home, hopefully we won't have to use the title insurance because we've done a lot of homework up front, right? And so
Exactly.
um, I have no further questions. I think you've done a phenomenal job explaining the process, the role the title services plays in the real estate transaction. Does anyone else have any questions regarding title services and, anything in general? And while we wait, I just want to share, there was one, Anisha knows about this story, where I was trying to sell the house in South Florida. And I've been trying to sell it for 2 years. When I tell you it had everything going wrong with this property, it had everything. It was two sisters that didn't get along. And so they weren't paying the HOA. HOA was like $500 a month for this condo. Their dad had passed away and left it to them. And so, yeah, probate was, a obstacle. Then we found out, because guess what? I had, you guys run the lien search, and we found two liens on the property. We had an HOA lien for thousands of dollars, and then we had a building code violation lien for $568,000. This condo wasn't even worth 50K. And
Wow.
so, yeah, that was a nightmare, but we were able to get it done. And so, I mean, you guys were essential in that process and helping me figure it out. And so it's always good to kind of have a title company that you have a relationship with, that you can work through things, because sometimes these things get a little squirrely. They can get a little squirrely. So,
They get very squirrely. My wife always says I should publish a book of all the
yeah,
things I've seen at closings and all the things I've seen on a transaction that happen.
yeah,
I could probably be on the phone for an hour and a half. I'm telling you, I guess scary stories, what
yeah.
happens, but they're all not like that. We also have the ones that everything works out great and everything. And that's
Mhm.
our job, is to prevent the scary stories from getting too bad. In that
Yeah.
situation with the two sisters, I kind of think I might have remembered that story a little bit.
Mhm.
I've had a couple where, divorce situations, as Royce will tell you, are tricky when you're dealing with a seller that are getting divorced. That could be
Yeah.
a little tricky sometimes if they don't get along or they don't communicate. We try to bring them in at different times so there's no animosity.
Yeah.
Even in the closing process in the old days, we would bring all the parties in at one time. Well, we
Hmm.
stopped that 10, 12 years ago, and we break up the parties, because our thought process with a lot of the other title companies' thought process is you're signing very, very delicate documents that have pertinent information on it. A
Mm.
1003, which gives you all the information of somebody's work history, credit history. And why should the seller be there and know what your interest rate is, what you make a year? So
Yeah.
we separate it. We try to bring the seller in early, because the seller, if you're selling the property, you're really not going to be there very long. The paperwork is very minimal, depending. And Royce is shaking her head. If
Yeah.
you're buying
Yeah.
it,
I was in and out 30 minutes.
yeah, you're in and out, right?
Yeah.
And
In and out.
if you're buying the property, depending on what type of loan package you went through, whether it's a VA, FHA, I'm going to tell you right now, if it's a VA, you're going to be there for a good hour. You're going to have a lot of stuff, and if you're doing a first and a second, we're going to have some refreshments in the back for you to relax a little bit, because you'll be signing for a good hour and a half. If it's a FHA, you're there for a good hour. If it's conventional, depending on the institution that did the loan package, about 45 minutes. If it's a credit union, those credit union packages, or so if you're in a
Yeah.
credit union, they're pretty quick and they get a lot of the documents. So these days, if you're applying for a loan, what I'm seeing, the trend is they try to have you sign a lot of your documents up front. So they're going to do a
Mm-hmm.
lot of documents up front to you. You're getting a lot of disclosure forms, a lot of things to sign up front that they do already. So they won't be including in the documentation. You're already going to have enough documentation between the closing and disclosures to sign and some affidavits and the mortgage, the notes, and some other pertaining documents of title documents to sign in the meantime. So if they can take it off our plate and send you some documents in the meantime, they'll leave them out of the package. And at the
Gotcha.
end, you will get a copy of everything. The girls give you that. They're really good. And there's another thing to keep. Always keep your documentation as long as you own that property.
Yeah.
If you do get rid of the property, I would shred them. Keep your survey. Survey is very important because I don't know how many phone calls we get sometimes. Somebody doesn't have the survey. So if you're going to put a new fence in from Lowe's or Home Depot, they're going to make you provide that fence. If you're going to put a pool in, excuse me, that survey, they're going to make you want to see that survey because you're going to be
Mm-hmm.
making a change to that survey. So they
Yeah.
will make you show you that survey.
Yeah.
So sometimes if the seller hasn't made any changes to a survey, we're able to use it depending on the financial institution if they let us use that survey. 9 out of 10 times though, they do want to see a new survey on that. So
Gotcha. And I guess as we wrap up, I just have one last question. If we don't, I know you mentioned the time frames of how long it usually takes depending on the loan program, but if, you know, in general, what are the main, because it's a lot of documents that you're going to be signing. There's no
yeah,
way anyone kind of reads all of them while they're sitting there signing. So if there's, what are the top three things that you should make sure you pay attention and that's correct when you're signing your documents?
I'm going to make sure the top three things are your CD, because that's where your
Okay.
numbers are, your closing disclosure. So you want to make sure all those numbers that you've seen from the agent, the lender add up. Everything adds up. And don't be afraid to ask questions. Why was it a little more? Why was it a little less? It's usually going to be in it's going to be in the taxes, or if something got raised up, it's going to be in them. You're generally going to have a really good feeling when you get in that you know what you're going to have to bring.
Mhm.
The note, I would definitely know their note. That's this is the interest rate you agreed upon. If you agreed upon, 6.5%, that's your rate. And that the rate is a fixed rate compared to a variable rate before. If it's, we used to do some little different things these days that, adjustable rates would make sure you get a fixed rate. You know what your rate's going to be, your
Mhm.
note and your mortgage, knowing that you're signing a legal binding document that you're bound to that property, and there's really no way out of that unless you sell the property. Also, know about assuming. So, if you want someone to assume, there's some loans you cannot assume. So, I would
Mhm.
be asking your lender those questions. Get your lender involved and ask him those questions. Don't be afraid to ask the lender some of these questions, your loan officer, when you're sitting
Mhm.
down with them. These are
Yeah.
questions. Hey, what if I want somebody to assume my loan? Or what if I want to refinance down the road? How long do I wait to refinance? What's the
Mhm.
rule of thumb?
Yeah.
What's the rule of thumb for refinancing? Do I wait a point? Do I wait for 2 points? And as you know, right now we're in a changing marketplace. Our rates have been up and down a little bit. Royce could probably tell you some more.
Mhm. Yeah.
And that's another thing. Make sure you pick a really good loan officer. Just because someone said they have the best loans in the world doesn't always mean that they are the best loan officer. If you're going online to one of these online companies, make sure you're dealing with that person as your loan officer. Make sure you
Yeah.
get on a Zoom call and you meet them. If Royce gives you a recommendation on a loan officer that they use, make sure you check that person out. Don't be afraid to read their reviews. Don't be
Mhm.
afraid to ask them these questions because these are the people that are going to lend you this money that you're going to be bound to. So these are questions you want to know and ask for your loan officer. How long is the loan going to take? How long do I have to wait? What's the possible fallout? I mean, there's going to be a lot of things thrown at you. They're going to ask you for a lot of documentation. The financial institutions. They're going to ask for, a lot of your back taxes, your bank statements, a lot of things you're going to get from the loan officer to qualify you. You're going to hear
Mhm.
about rate to income ratios. You hear a lot of big terms, and don't hesitate to ask them. Put that
Yeah.
in layman's terms. I
Yeah.
know because I've been doing this for over 30 some years. Royce knows it. My Nisha knows it. but don't be afraid to ask your loan officer those questions. Hey, what do you mean by this? What does it mean? It has to go back through underwriting. I thought I was okay, and well, here's what happened, your ratio, or you just lost your job, or now we can't get you improved. And the loan officer is going to tell you important document to do. Don't go out and buy a car during the process. Don't get any, don't go out and buy furniture on installments. Really, when you're buying that house, stay with that. I say this: don't even buy a pack of gum. I'm just kidding you on that, but really try to stay in your lane with that. Make sure you're talking to your loan officer. If there's any questions regarding title, Royce has all my information. I provided a couple documents. It was great talking to you this afternoon from Riverview, Florida. Thanks, Nisha, for joining me. And Royce, you were a great host and admin, and I hope everyone has a great home buying experience.
Awesome. Well, we want to thank you for taking the time out to share all of your expertise with us today.
Thank
The
you.
big thing that I wanted everybody to take away from this too is that we all work together. Like we've been doing these classes all summer, and as you can see, we're all connected. Tim works with the title agent. Oh, well, he's the title agent, but he works with the lender. He works with me. We all work together. And so that's the biggest thing. We want to make sure that you all remember. I will be sending out Tim's contact information with the replay. So if you ever, buying a house or you're selling a house in the future, Tim is great to have as your a contact so that we can work with him in the future or work with him now. So if we don't have any further questions, I know this is meant to be a lunch and learn, and so we will go ahead and let you all go. Oriette, did you have any questions or anything, comments?
No, this was great. Great. The question you asked last, thank you, Tim, for clearing that up, like knowing what to make sure that you look over before you sign closing disclosure, the note. Very important. Thank you so much.
Awesome.
Oh, I do have a quick, I don't know if you would be able to answer this. So after you've closed, how long before it actually like shows on your credit and your shows
Great
that you
question.
own a home?
So
Is it like a
I'm sorry,
week?
you're breaking up a little bit. Royce, was the question, how long after we close does it get recorded? Is that what it was?
Yes, and it shows up on your credit.
Okay. Oh, it shows up on your credit. Well, boy, well, it's your first mortgage payment. Let's talk about that. So if you close with my office today, and you're using the loan officer questions as well, but I think I can answer it. It's always going to be depending on the day you took the application, the day we get to closing. Let's say you close today, August the 22nd here. I would imagine your mortgage payment won't be due until November. So it's factored into your interest on what you're going to pay. So I call it a payment break to some people when I'm explaining closing documents when I do closings. So I would say as far as it showing back up on your credit, it would probably go on after you make your first payment, which would be probably like I said, if you close today, the 22nd here of August, I imagine November, in the mid-November would probably be your first payment date on that, because it's the way it's factored into the interest. Some a little quicker, but it's usually about a month and a half afterwards. I tell people it just depends on the way they set up and they get it into motion. But you will get in the closing package, you'll get temporary mortgage payment coupons. And depending on how you set up your mortgage payments, could be coming out of your paycheck, could be coming out. They're going to mail you a statement. A lot of companies have gotten away from that. You can still ask for a paper statement, but you will have temporary coupons that shows you when you're first. I know a lot of people are now setting it up with their bank. And there's another thing they set up, is called the bi-monthly mortgage payments. If you want to get that mortgage done a little earlier than 30 years, you can do a bi-monthly or bi-weekly. And that actually works out to be a little bit more in your favor, that you can pay that loan off in about 20 years. So you would talk, that's another question to ask your loan officer. If you want to make an extra payment, you want to make sure you apply it to principal. You don't want to do principal and interest. You want to do it to principal. The most important thing about a mortgage, I can make myself dangerous here, is you want to apply to principal. You want to knock the principal down. You don't care about the interest on your property. You care about the principal. And you're going to get with a statement that shows all your payments down. And it's kind of a scary statement. I always try to breathe through it. And Royce is laughing.
Yeah, it is.
And because you really can, if the rates get favorable again, you know, if the rates get favorable, like our government has said, you could probably get into maybe refinancing and doing a 15-year mortgage, which would be good. It would probably escalate your payment a little bit, but in the savings in the long run, you're going to pay that property off. Because the big thing in when you're owning home ownership is getting equity in that property.
Mm-hmm.
Right, Royce? Would you agree?
Yeah.
Building that equity, because that's going to build you down the road when you move into your secondary house. When you call Royce, that now your starter out house becomes your second intermediate or your larger house. So it's building that equity, and the loan officer can tell you that. So these are questions you definitely want to ask that loan officer is, you know, how can I build equity? How can I get this paid off earlier? There's some different methods to do that. So the biggest thing is doing that. And if you have any questions on that, I'm pretty versed on the mortgage side. I can help you with some questions on that as well.
And then also, Oriette, she's asking because she's actually purchasing, she's in the process of purchasing a home now. And she should be closing next week, actually.
Okay.
And so I will send you, Oriette, like calculators that you can calculate how much extra if you pay, how it will shave off time of your loan and also interest. Because that document that Tim is referring to that's kind of scary is it shows you if you make every payment for 30 years, what the actual balance is. And most of the time, all the time, it's like you're paying double or even triple the cost of the home if you literally pay the interest for 30 years. So what he's saying is when you do make an extra payment, you want to put it towards principal because you're eating at the principal. So you don't want to just just submit a payment, because if you submit a payment, then they're going to take it as the next month's payment. You want to specifically designate principal payment only and put your amount and then submit that.
Yeah, because it's going to come off the principal balance on the loan. And the more they do that, but like Royce said, if you just send in a random because you got a Christmas bonus and you want to pay off, you know, maybe another $1,500 on your mortgage, well, they're going to eat away on your interest on that. They're not going to eat away unless you put principal only. And there's always a box on your payment, temporary coupons and your payments that says principal only on that to knock off the principal. You're making an extra payment. And it's like I said, it's something to ask your loan officer. You know, your loan officer has to play a key. If this is someone who's really worked with you and all the way through the process, these are questions you want to ask, because we feel we're going to get our rates a little more favorable. And that's going to be a good time to you know, get off the fence and to purchase a home. And going forward, if they even get more favorable like they did a few years ago, we'll see a nice refinance chart here in this area.
Yeah, exactly. Okay. Well, thank you so much, Tim. We really appreciate your time and all your wisdom in the process. And so our last class again is next week. We will do Home Buying 101. I will be covering new buying, new construction. I will be the one teaching that class. And then we will be back because we have the team here. You guys had a chance all summer to meet everyone that's on the homeownership educational team. And so I look forward to the big things we'll be doing in the future. And I want to thank you for your time.
Thank you, everybody. Thanks, Royce.
Thank you.
Okay, thank you.
Bye-bye.